Gas prices are on the rise due to an increase in demand. The average price per gallon now $2.87. It's up almost $1 from this time last year. Demand up 2% just last week. Joining me now to discuss, GasBuddy.com petroleum and analysis head Patrick De Haan. Patrick, great to see you this morning. Good morning. Your thoughts on the rise in gas prices, because part of this is, yes, there's more demand and people are hitting the road again as we get into that recovery phase. But part of this also is an anticipation of very, very aggressive energy policies coming from the Biden administration.
Well, as we see here, certainly Biden administration going to have a profound impact on the oil and gas sector. A lot of Americans, of course, saying, you know, this is what we're in the midst of, when right now it's really the economy that's pushing prices higher. But like you said, in the future, absolutely, the limitations on new drilling could eventually become an issue. And of course, now we have this massive infrastructure plan and how to pay for it. And of course, you know, the potential's there. The federal gas tax hasn't been touched since 1993. So motorists really need to be on alert for rising gas prices this year.
It's not just the motorists. When we look at the markets, Rob, it's also the energy sector, a lot of the big companies, too. Your thoughts on how this is all impacting, you know, Wall Street and the energy aspect of it, and as well as gas prices?
Yeah, well, I mean, that talk, the whole talk I had earlier about inflation being an issue, a lot of investors are being concerned there. Out here in Los Angeles, we're paying almost $4.50 for premium gas. So, you know, that's definitely an issue. But I think when you look at valuations in the market, energy is one of those areas that really hasn't participated in a few years. So for investors who are in the energy space, this is actually a good thing, because you're seeing those names like the drillers, the integrateds like Chevron actually leading the market here. So from that perspective, if you have a well-diversified portfolio, it could be good.
That's interesting. Patrick, I'm curious to get your forecast, because you look at 287 and we're in March, and I've been covering oil for a long time. I know seasonally, as we head into the summer driving season, July 4th, we've got a recovery on our hands. These prices are going to go up. And as they go up quickly, it always takes much longer time for them to come back down. So what are you thinking consumers are going to see in July, for example? Well over $3.
Well, it certainly could rub up against $3 a gallon. We did just see OPEC last week announcing a small increase in oil production. So it's really a game of, will supply continue to meet the rise in demand, and where will we be this summer? We did see an increase in COVID overseas in Europe, and so that threw oil prices down a little bit here in the last few weeks. Whether or not we hit the road this summer really looks like all signs are there. We're in the 6th week of gasoline demand going up. It looks like consumers still have that risk of seeing a national average of $3 a gallon at some point this year, as demand continues to show an impressive recovery.
And when we talk about OPEC, you know, President Trump was pretty forceful when it came to OPEC, Patrick, and he had them sort of right in line, brought those oil prices down, but we know it hurt them. They are increasing that production now to take advantage and to benefit from some of this. And you think, again, when it comes to the Biden policies here, it's like, you know, across the globe, he's sort of just letting people do what they want to do.
Well, it's clear that the Biden administration is not anywhere near as friendly with the oil and gas sector. And, you know, motorists are going to be feeling the consequences of such a policy. You have a hard line in oil and gas sector. It's going to make things more expensive, and that's what motorists are going to have to face this year.
Brian.
Yeah, Jackie, I just think the last point you raised is so important. People watch, you know, gas prices and oil markets, and they say, well, all of this is determined by foreign powers. It's somebody overseas that's deciding whether to open the spigot or not open the spigot. The last few years, as we've increased production, we felt like we were getting some control over our energy again, and now it feels like that's slipping away. So, you know, Patrick, I see us talking about OPEC, and are they going to raise production, how much? And I feel like here it is, once again, we're at the mercy of somebody over there instead of using the resources we have here to keep energy prices reasonable.
Yeah, you know, excellent point there. And of course, where would we be without COVID? U.S. oil production probably would still be up. So COVID certainly set us back a ways in energy independence now, with U.S. producers having really no choice last year but to shut down wells and to lay off thousands of workers. Hopefully, that will come back fairly quickly. Now, keep in mind that the existing wells and existing permits are allowed to move forward on federal land. It's simply new permits that are not. But whether or not we see that recovery really going to be a function of oil prices, which really going to be a function of if Americans hit the road this summer, and all signs point to that being true.
Well, we'll be watching, and people definitely want to maybe hit the road more than they do want to travel on an airplane, for example, and they are going to feel this. There's so much pent-up demand for travel, vacation, for getting back to normal. So we'll be watching closely. Patrick De Haan, great to see you. Thank you.
Thanks, Jackie.